Hey guys, welcome back. Thursday, September 19th. And in this video, I hope to explain to you very nuts and bolts, non-conspiracy level stuff. What is going on with this lawsuit filed yesterday by some of AMC's first-lien debt holders. We'll go through it at a very high level. I'm going to keep this simple for you guys. We'll look at how the bonds are trading on the Bloomberg terminal. I'll go over my spreadsheet with you that I'm tracking the debt restructuring on. And so if you've been wondering why are they doing this now and how might it affect you if you're holding AMC or thinking about buying some, I hope to cover some thoughts with you here in this video. Stick around and let's get right into it. As we get started going through this, the same reminder that I've told you guys 1,000 times, if you've watched my channel, nobody pays me for any content on this channel. I don't have access to any special inside information. I don't have any contacts at AMC. I'm just an unemotional trader who likes to read filings and then share my due diligence with you here on YouTube. Maybe you'll find it helpful, maybe you won't. It doesn't matter to me. But if you do find it helpful, leave me a comment down below. And if you find an error or mistake in this video, leave me a comment down below as well. Let's go over AMC's debt table just as a foundation. This is from the latest 10Q, June 30th, 2024, just prior to the July debt restructuring. And I have highlighted in yellow the first and second lien secured debt, keyword secured, and then the subordinated debt is highlighted in green. That is unsecured debt. If you've been around on social media and heard any retail trader or commenter on social media talking about buying bonds a couple years ago when they were really cheap, when there was high bankruptcy risk, that would be the green subordinated debt. Now that opportunity has passed us by. These bonds are trading back up close to par value. If you bought them cheap a couple of years ago, you're doing pretty good right now. But what is important to know, besides the fact that the yellow ones are secured, is that the green ones are unsecured. So if you're hating on people that were trading bonds, they were trading unsecured bonds. If the company went bankrupt, the people that were trading the unsecured green subordinated debt would have got no recovery, just like those of us that were buying common shares. There's just too many liabilities versus assets on AMC's balance sheet, and anybody that was taking the risk buying these subordinated debt bonds would have got no recovery in the event of a Chapter 11. So consider showing a little grace to our fellow traders who picked a different trading opportunity, bonds versus stocks. They're not betting against the company. They were just betting on bonds and betting on no bankruptcy. They had everything to risk, just like those of us that were buying the common stock. In the event of a Chapter 11, both common and the subordinated debt would have been wiped to zero with no chance of recovery. AMC had just over $2.6 billion of secured debt due in 2026. And that was something a lot of us have been watching because we are getting close to 2026 and they needed to restructure that debt and push out those maturities. And that was what happened with the July 2024 debt restructuring deal. Not all of this debt, however, got restructured. I don't know how closely all of you guys were reading the press release back in July of 2024, but it said that in the new debt deal, the company struck a deal to restructure up to $2.45 billion. And if you've been watching my channel or following me on Twitter, you know that I've been calling this still a work in progress because not all of that $2.45 billion got restructured yet. So I took the debt table from AMC's 10Q and the press release and kind of have been tracking it on my own in my spreadsheet where I can see a before and after view of exactly what is going on and what is still remaining to be restructured. This is critical for us to understand as investors, especially if you're wondering what is going on with the price. You need to understand what debt is still due and when. And you can see in the after column up here, there is still $800 million that is due in 2026. That was part of that $2.45 billion deal that the first lien holders didn't take. And those people that own the $800 million are now the ones suing AMC in New York court. They didn't want to participate in the debt restructuring deal for whatever reason. We'll talk about that in just a second. But this $800 million is still due in 2026. So prior to July, we had $1.9 billion. Now we have $800 million due in 2026. And then the other piece of it is this second lien secured debt, the 1012 PIK toggle. Prior to July, there was $788 million due in 2026. With the debt restructuring, most of that got knocked down. There is still $274 million, though, of that second lien secured debt still due in 2026. We're not going to focus too much on this second lien secured debt. I think that AMC will pay that off over the next 2 years. What we're going to talk about and focus on in this video is the $800 million of first lien secured debt that was not restructured, because that is what the lawsuit this week is all about. What AMC did in the debt restructuring, as you probably know by now, is they created a new wholly owned subsidiary called MovieCo. They threw out all of the old debt deals and the debt covenants and took a lot of the company's assets and moved them under MovieCo, and then issued new debt with maturities in 2029 and 2030. And that resolved a lot of the immediate bankruptcy risk, all of this $2.6 billion looming over the company's head in 2026. However, if you were one of those bondholders who chose, for whatever reason, not to participate in the new debt deal, you had a secured debt secured by the assets of the company. However, now all of those assets got moved into a different subsidiary owned by AMC, MovieCo. And so you're stuck holding bonds. Hey, I didn't want to participate in the new deal. My bonds are still here, but now I don't have any collateral to back up this debt that the company owes me. And were anything ever to happen to AMC, if the worst happened and the company filed Chapter 11, you're holding these bonds and now you have no collateral. So that is what the lawsuit is about. These bondholders up here that still hold $800 million of what was first lien secured debt now own debt or bonds that are not secured by anything, and they're pretty pissed off about it. The other thing that you'll notice is the $788 million of second lien secured debt, which is lower status than the first lien secured debt, lower in the order of getting paid back in a bankruptcy. That $788 million got knocked down to $274 million. Where did the difference between those numbers go? It went right up here in this new PIK toggle, the exchangeable notes or convertible notes. And you'll notice that I have them up there now, equal in status to the first lien secured debt. So some of the junior debt holders got their debt moved up into first lien secured status. And that is another thing that the first lien secured bondholders, who now have no collateral, but they are holding $800 million worth of bonds, they're kind of mad that a second lien secured debt or a junior bondholder got moved up in status above them. So in the event that something ever did go wrong with AMC and there was a bankruptcy, these junior bondholders got moved up in status by taking the new debt deal, and the bondholders that did not participate in the new debt deal are not very happy about that, and that is a second reason why they filed their lawsuit. So what are they asking for in the lawsuit? What do they want? They basically want the old rules back in place where they have a claim to the collateral of AMC in the event of a default. Is AMC at risk of default? Well, according to what I'm seeing here on the Bloomberg terminal and the prices for the bonds that are available for AMC, you can see for yourself that most of them are trading at par, above par, or very close to par, which tells us that the bond market is not seeing a high risk, at least in the short term, of bankruptcy for AMC. Q3 box office is looking really good with 10 days to go here. It looks like it will beat the Q3 2023 box office. Q4 we expect to be even higher. Both of these quarters I'm expecting AMC to book a positive net income, and the bond market likes that. When AMC has positive free cash flow and positive net income, this is going to push those bond prices up. And based on what the professional analysts that cover the movie industry and all of the CEOs of the movie companies are telling us, is that 2025 and 2026 are going to be even better than these last 2 quarters of 2024, Q3 and Q4. As AMC begins generating positive net income and positive free cash flow, then they can take care of some of these other maturities that are smaller amounts and closer dates. So really, we circle back to what is going to happen with this $800 million. This is the key that needs to be resolved in this lawsuit. Do I think that these bondholders are suing AMC because they're shorts, they're evil, and they just want to bankrupt the company? I don't think that. I think that they're probably legitimately upset that they lost the collateral that was backing up their bonds, and the court will settle that. And I would also bet that in planning MovieCo and the debt restructuring deal, AMC thought through this and knew that potentially somebody wouldn't participate and potentially there might be a lawsuit. And I'm not a lawyer, guys. I can't tell you exactly what's going to happen, but I would be willing to bet that AMC's lawyers probably have a contingency plan for this and are well situated to defend this in court. I don't know what's going to happen. We're going to have to wait and see. It will likely be settled. Maybe AMC will offer some better terms to these plaintiffs here. Maybe they'll give them access to the collateral. I don't really know. We're just going to have to wait and see. But I'm not in panic mode over this. It was kind of expected, right? We knew that $800 million, or those of us that were paying attention, knew that $800 million of the 2026 debt didn't participate in the new debt deal. And we were wondering, okay, why didn't they participate? Either they're upset and they're going to sue, or they're just going to sit back, do nothing, and say, hey, pay me in 2026. So the two sides are going to have to work this out, and I'm fairly confident it will be resolved. It is in nobody's best interest, including these bondholders that are plaintiffs in this lawsuit, to drive the company into bankruptcy. The logical conclusion to this is that the two parties will come to some agreement. The executives and legal team at AMC, in my view, are doing everything possible to avoid ending up in bankruptcy court, especially as we're getting into what looks to be a very optimistic period for box office revenue. Finally, the company can get some breathing room with some positive net income. I'm not saying that they're out of the woods yet, but I'm saying it's way too early to say that AMC is done for all of you negative people out there. Things are looking very promising. We got to get this lawsuit out of the way. You've been looking at the chart. You can see that it's trading in this narrow band that I have with the supply and demand zones. I'll talk some more about price action in an upcoming video, maybe this weekend after we get the box office behind us. This price action here does not surprise me, does not upset me. I see a lot of people losing their minds on social media. Why is the price not going up? And the box office is so good. You're going to have to wait for this quarter to finish and for the analysts, I think, to give some updated earnings per share numbers. They're all forecasting a negative quarter, and I just do not see that happening. I will share my spreadsheet with you and go over the exact numbers around October 1st or October 2nd of what I'm expecting for positive net income from AMC for Q3. But we'll do a weekend update talking about trading and the price action. In the meantime, go see a movie. Don't trade emotionally. There's no reason to get upset over a stock, especially when the quarter's not done yet. Everybody's going to know what the numbers are at the end of this quarter. And if these analysts don't, then they are either lazy or dumb. I hope you found the talk about the debt and the bonds and why this is happening helpful. If you have any questions or comments, please leave them for me down below. I'd love to hear from you guys. I am Tony Denaro, and I will see ya on the next video.